Well, hello boys and girls. We're not at home, we're enjoying the sunshine. What we're going to do today is have a little Q&A driven by you guys. Maybe Winky will make an appearance, because it's good. And if that fails, Winky and I will make a sex tape. How's that?
I don't
Sorry,
think so.
I think we will.
Good.
I've been trying for years, it's not happening. Should we do a sex tape?
No.
Oh. Should we do a Q&A?
Yeah, in the sunshine.
Should we show them at the hotel?
Yeah.
Alright. Well, what we'll do, we'll show you a little bit about where we are, and then we'll drop down on the veranda and I'll answer your questions. Wait.
Matron, take them away.
Bring me sunshine all the while. Well, hello and a warm welcome to one and all. And if this is your first time here, as you can see, I am the very burnt, scruffy trader. And with me is Wonder Wink, who normally wonders what I'm getting up to. Certainly when we're on holiday, because we get into all sorts of mischief.
You do.
I don't. Well, a little bit. But all the waiters know me, get our drinks on time, and we have a jolly old time of things. And that's what we're going to do right now. So, as I was saying before the intro, we're going to be doing a little Q&A. But I thought, I'd kind of show you around this place first, just for a minute. And it might give you an inspiration to come to Turkey. Because that's where we are. We're in Antalya, a place called Side. And it is beautiful here. You can see it right down on the beach front. Across there's the marina. Be in there having some dinner tonight. And why not? Let's have a little look around the hotel. And then we'll drop into your questions. Okay, boys and girls, let's have a little tour of the hotel. Here we are at 2E Blue. Come with me, let's have a look. It's great up on this veranda. It's very quiet, nice and simple. Let's have a little look round. So you've got our own private bar, you're allowed to use that whenever you like, self-service. And it's nice and intimate. Talking of intimate, there's a hot tub there. Winky said I can go in it. The bad part was, she said she's not coming. Where's the fun in that? You laughing at?
Yeah.
Apparently we two old boys and girls. Regenerate yourself. Go on, watch Doctor Who. Oh, no shock who's waiting at the bar, is there? Oh, waiting for another drink, are you?
Why not?
Why not? And it's great up here on a night time. Very cool, very relaxing. Just behind me in that corner is where I like to sit. Not sure if you can see it with the glare of the sun, but that's all just on the other side of there is all the ocean. Beautiful, absolutely beautiful. But talking of beautiful, and look where we're shocked. Bearing in mind it's 9 o'clock in the morning here. Oh, look who's standing at the bar. I am surprised. Let us find out what she's up to. I'll guarantee it's been a piss hit. So, my love, what are you doing? Waiting for a coffee. Irish coffee with a whiskey in it.
I don't like this.
No, that'll be wine then. Let's go downstairs, see what's going on down there. Beautiful down here. Nice beach. Better bar. Ice cream. Loads of bars down here. Fantastic. Nice wander about. Where'd she go?
I'm here.
She ran off into the bar again, boys and girls. I can't tell you how much alcohol this woman drinks. You think I'm bad? She's fucking terrible.
I don't need so.
Liar.
I do not.
How many drinks did you take up at the room when we said we were going to bed?
I took one each.
No, you didn't. I already had mine, so that'll be. How many was in your hands? 2 pints of vodka orange.
No, it was.
Made Oliver Reed look almost sober.
You tell a lot of things.
Trust me, I don't. Why do you think we get on so well? See, she might be quiet, but trust me, she's not. She's a right little rave when she gets going. And you, little pisshead. It's good here, isn't it? You want to die. Okay, boys and girls, hope you're well. As promised, I said I would do a Q&A. Traded in the coffee for some water because it is scorching today, 35 degrees here in Turkey. But don't worry, I will be off getting a coffee a little bit later because we all know Scruffy likes a coffee, and trust me, he does. But what we doing? Well, I said I'd do a Q&A, and here we are. So what I did a little while ago, if you bear with me, I'll show you, is in the YouTube community section, I posted this question saying that while I'm on holiday, I'm going to be sort of doing this Q&A for you. And as you can see, some of the guys they've responded to it and put some questions in. So I also did it on Facebook and a couple of other places, and I've compiled the questions for you. But if you want to add to them, find that post and you'll see the questions that I'm going to talk about, and well, make your own decision and pass your own judgment on it. Okay, so let's have a little look, shall we? Okay, so the first one, well, it's actually 4 questions from Michael Tours. So a little salute to you, my friend. I do hope the boat's getting better, because I have seen that you've been trying to repair it and living the dream on the ocean waves. Fantastic. Keep the pictures coming. They're really good. Right, okay, question 1. How far should we go out with Scruffy Madness? Can you repeat good value points to set Madness 2? How big can the risk be? And the reason for asking is he got stopped out on Tuesday costing 600 points. Sets me back 3-4 weeks. Okay, so that's question 1, and there's quite a bit to unpack with that. In the squad, I'll be doing a live stream specifically on Madness. Okay, so I'll address a lot of it there. But for those of you who don't know what Scruffy Madness is, it's just my version of pound averaging. Okay, and for those of you overseas, it's also called dollar averaging. It's like a banking system of getting in at a better price. Now, the value points are your entry exit. Okay, so you should be able to recognize on the chart where a good entry is, and if it is wrong, where you're going to get out. The 2 fixed points, and then you measure out between however many splits you want. I personally use 5. I can go up to 10 if I want, and I'll probably carving, but whatever it is, you just measure it out. Okay, and how big can the risk be? Well, the risk is up to yourself. Okay, there's nothing wrong with having a wider stop, but it's all got to be in relation to the account. So if you have a massive stop, that massive stop can't eat your entire account. It only has to be a small part of it. Now, how far you go with that is personal preference. You know, some people like 5%, others say 1%. It's the yin and the yang. If you've got a small account and you're just going 1%, you're not going to make any money. You have to up your risk. But if you've got a big account and you can absorb it, then 1% becomes very viable. So again, it's personal choice based on your own account. Okay. So, second question. What are the signs to get out of a trade early? referring to Tuesday's trade. Okay, well, it depends on what you're calling get out of it early. And when you're saying 600 points, I'm assuming it's 60 pips. If it was 600 pips, oh, that's a different story. But the signs are a change in sentiment. So if you have a reason as to why you would get into a trade, just for argument's sake, say it's a moving average cross. Well, your sign would be that in reverse. So if you look at this chart again, and it is going the other way, in other words, the moving averages have crossed the other way, then you just get out because your sentiment has changed. Or you look at it from a point of view of how much pain am I willing to take. Now, when I measure out a chart, I look at 2 structure points always. Now, that can be 2 levels. It can be 2 sort of points of resistance, because I'm always trading pockets of air, you know, space between sort of a support and resistance line and a moving average, or the edge of a Bollinger Band and the moving average, edge of a Bollinger Band, moving average. There's all sorts of different ways you can do it. But once your pocket of air is being breached, or the gap between the two, you have to start thinking to yourself, am I correct? And the moment you ask that question is the time you want to be thinking damage control and get out. Now, when I'm scruffy madnessing into a trade, I'll go 0 to the 50%. Once it goes past 50%, the chances are I'm wrong. And then I'm just looking to get out. Okay, and then I'll manage my trade out, and I'll get out at a small loss, scratch, or a small profit. And that's what keeps me consistent as well. I never hang on to a trade on a prayer. You know, I don't mind it going against me, you know, as long as it's within the parameters that I've set. Okay, so, all right, let's have a look. I didn't fully understand pivot point and how to use them. Okay, so that's it. That's a different topic altogether, Michael. Pivot points are just hypothetical levels based on maths. Okay, a little bit like Fibonacci, but on a different way. Now, depending on your platform, it's normally the open, the high, the close, divide by 3. Okay, on a daily. And what happens is it would then stretch out, and it'll give what's called S1, R1, R2, S2, up to 3, and what they stand for, support 1, resistance 1, so forth. And you have the pivot in the middle. Now, if it opens below the pivot on a daily, there's a high probability it'll move to S1. It is bound between the 2 points. Okay, if it keeps on going and cracks S3, it would be a trend day. Okay, now that's the watered version of it. Again, when we're in the live streams, I'll go through this fully. Pivots are excellent for helping map a chart out. And what you're basically looking for is synergy between a solid support and resistance and the pivot. And if they line up, you know it's pretty solid. Okay. And always good to repeat how to build a bias. Question 4. Okay, bias is the key to your trading, and it genuinely is. Now, you don't have to be biased of the main trend. And this is one of the things that comes across regular in the argument between day trading and swing trading. If you're swing trading, you have to go with the dominant bias. And the easiest way to do that is 2 moving averages. You know, you have a longer moving average and a shorter moving average plotted on a daily chart. And remember that daily chart, once you're down in the hours, 15 minute, 5 minute, and I see them all the time, oh, well, you pick your bias, you just put a 200 moving average on. I don't think they actually know what the 200 moving average is. But if you look at it from a daily point of view, and you've got the 2, and then you're swing trading, that'll tell you the general trend. But you've got to be careful with it, because you can actually buy in or sell in at the wrong time if the price is very far away from those moving averages, because they will snap back. Now, what you're looking for all the time is multiple confirmation. And when I'm day trading, I use a +1, -1 system. And what that means is I'll look at an anchor chart. So for argument's sake, we'll say it's an hour. And I'm looking at it neutral. I'm not looking at the greater trend that I've just been speaking about. I'm looking at no trend. I'm looking for what's happening now. And then I'll look at time frame above it, +1, a time frame below it, -1, and I'm looking for confluence between all three of those charts. And whatever it is I'm looking at, whether it's an oscillator, a moving average, an upper quadrant Bollinger Band, lower quadrant Bollinger Band, whatever it happens to be, they have to be equal. And if they are equal, then it becomes a high probability that the market is moving in that general direction. I can then drop into a trading chart, which would be a 15-minute or a 5, and then I just look for a reasonable entry and a reason to get in, and then go with the flow. Okay, very, very simple. So there we go. I hope that helps you, Michael. I genuinely do. Question 2 is by EE, or as we call him, Eric. Hope you're doing well in Cyprus, my friend, and it was lovely to catch up with you when I was there last month. Very simple question from Eric. How and why do I scale? Okay. Well, this one goes back really to Michael's question at the beginning of what's Scruffy Madness. Now, many, many moons ago when I started trading, I used to go into market, as probably most of you watching this do, 100% at point of entry. So in argument's sake, if I'm on £5 a point, I would go £5 a point, and then I'm just on the prayer of the trade. I either have to ride it out, stop out, win, whatever. I needed to find a way that could, one, reduce the exposure, two, increase the profitability, but more importantly, save my psyche. And that's when I started studying dollar average, pound average. And I kind of worked out that Scruffy Madness is the best way. And I don't add into a trade going forward, I add into it going backwards. So when I see people having a pop at me saying, oh, you let it go vastly against you, I actually prefer that. I want it to go against me because I get a better price, it reduces my exposure, and it makes me more money. It's a very, very simple process. And the why is simply that, the psyche, but it makes more money. And it is, for me, common sense. You know, I never go in. So if I'm at a fiver, rather than going in 100%, I'll go in with £1, and then I'll put another pound in, another pound, and I'll build the position backwards. So each position is closer to the stop, so therefore it's reduced in exposure. And when it runs up to the target, it has further to go, so it makes more money. So I guess that's the answer-ish. Again, I'll go through it. I'll put it in a live stream one day. Okay. So, Dwayne, how are you doing, my friend? And I hope the move over to New York was well. Love the vids. Thank you very much. What time frame is your favorite for adding positions off and bounce points? Okay. Now, when I'm swing trading, if I put a swing on, it's not so much bounce points, but the favorite time frame is the daily. So I only need to look at it a couple of minutes a day. I can look at multiple products, and it's very, very easy. For day trading, that's slightly different. My preferred time frame is 1 hour. It's fast enough to show you the trade, but it's slow enough to show you the big picture as well. And then when I'm looking for, as you call them there, bounce points, for me it's just areas of attraction, 2 points between pockets of air. Again, I would be looking at the hourly because it helps me to see it. And also, I don't get spooked by the red and the green candles on a 5-minute chart because they flip backwards and forwards very quickly, whereas an hour, it's just a single candle and it slows your thought process down and makes you more profitable. Okay. Gene Hansen,
Good salute to you, my friend. Hi, Langers. I wondered if there was a list of the different access Discord channel benefits for each level membership. Okay. Well, what I'll do is I'll do a video on the Scruffy Squad rather than kind of hijack it into this. But if you look in the description of every video, there is a list, but essentially it's 4 levels. You've got the 2 that are just kind of support me and sort of seeing Cuthbert's where the coffee fund goes to. And you get to see my strength sheet on a morning. So I'll make up the strength sheet and you can see it, you can use it. There's a little bit of chat in the Discord. Silver, again, everything that bronze is, but you get all of my work journals and you get a little bit deeper into the Discord. Then you go into diamond, which is all about swing trading. You've got everything in the Discord apart from the rogue channel. And there's plenty of strategies for swing trading, how to use them, etc. And then you go into the top level, which is rogue, which is everything in the Discord because it has its own little section. And it's predominantly day trading. I do daily analysis for them when I'm at work. So if I'm going to trade the DAX, for argument's sake, I'll break the chart down. I'll tell them the how and the why before I trade it. There's all my strategies from GoldenEye, the push, you name it, it is there. All the swing strategies. There's over 500 videos in the library, and you've got direct contact to me as well. But again, it's all in the descriptions. Okay, and Simon Natras. That's a name I recognise from social media. I do thank you for the support. It's great that you're engaging with the silly pictures that we put in. It really does make my day. So Simon, let's have a look. It's back to the squad. What would you say differentiates members who are able to achieve consistent success in their trading as a result of being part of the Scruffy Squad and those who aren't able to translate teachings into tangible results in their own personal experience? Okay, Simon. So I'll kind of answer this in a different way rather than just say the squad is brilliant. I think this is a question on traders in general. What I have seen in the squad is the ones who stick with it and kind of understand what I'm trying to say. And I'm not a teacher. I don't claim to be, and I don't really want to be. I'm just a guy doing a job, but showing you how I do it. And then you have a framework you can use. But what the guys have done is the ones who stick with it, because it's all come and go, there's no tie-ins, and understand is they have disciplined themselves into a better way of trading. Whereas the ones who don't succeed are looking for the magic pill and quick money. You know, they'll be in for a day, they think it's dead easy, and they fail. Now, in the general spectrum of trading, I think it's the same. You know, I have a lot of problem with Popeyes. I genuinely do, because I'll tell you the way I see it. And a lot of them, I just tell them they're not going to make it, so give it up. And they don't like that. And because they think there's a secret club with a magic key, I'm just being sort of rude and not giving them the knowledge. It's not. I can't give them something they haven't got, which is discipline. And if you're disciplined in your trading, you'll get a whole lot further, because it doesn't matter what system you use. You have to sort of be able to apply the right set of rules at the right time. There isn't a one fits all. And that's the difference between somebody who will succeed and somebody that will fail. The one that will succeed will recognize when something's wrong and they'll quit. They'll dial back their position size when the markets are not really fully aware of what's going on. In other words, they can't read it fully, but they still want to trade, but they'll dial back, and that'll give them room to breathe. Whereas the ones who fail, they just look for quick money, and it's just never going to happen. It's process over money. And this is something I hammer home all the time in the squad. You know, process over money. And when you're done, quit. Don't overtrade. So I've ironed out a lot of these traits for the guys. But at the same time, I'm showing them how to read conditions in the chart that will make them money. Because like I say, there's no magic pill. You've got to know the right time to press the button. And if you are going to press the button, you need to know the how and the why. And there's not one course in the world that will teach you how to do that in 15 minutes, as is shown on the YouTube ads, you know, and sadly those guys are never going to make it. And because of that, they kick off, you know. Put the work in, get the reward out. And that's what the squad's all about. Okay. So, let's have a look. SB, another one I recognise, comments quite a lot. Really do appreciate the support there. 2 questions. Have you ever traded options? Well, that's an easy one. No. I live in the UK, so it's standard Forex and spread bet is what I've always done. Very, very simple. And the second one, how much have you made in profit from trading so far? Right. It's quite a hard question to answer because I don't know whether you mean it as in my lifetime of trading or say my current yearly wage. But when you grow up, it's 2 questions you never really ask anybody. What's their politics and how much do they earn? So I'll answer it with a political question, or political answer rather. If you're looking at lifetime, look at it this way. I haven't had a losing year in 7 years. I took a colossal loss 2015 and I learned a huge lesson, and it served me well for the following 7 years. And I haven't had a losing month in the last 3 years. Okay, so that's the overall. If you're looking at my yearly wage, I break it down into 2 points. I have a basic wage, which covers my bills, and that's built up of trading 3 days a week, £200 a day, 48 weeks a year, and that is just a shade over 30,000. So that's the basic wage that I look to earn. My on-target earnings is 125,000, and I haven't achieved it yet. I've done my 30,000 for the year, and I'm working my way to my on-target earnings. And well, ask me again in April. But life's pretty good at the moment. I think is the easiest way to answer that one. And then we've got Dusty Bin. Hope you're doing well, my friend. I genuinely do. I'll still send you the Ted Rogers jokes. I know you don't get them, but for my generation, 3, 2, 1 was what Dusty Bin was all about. And for you youngsters, just Google 3, 2, 1 quiz show. And if you can crack the quiz, well, you probably cracked the Enigma code as well. It was rock hard. It really was. But let's have a look at your question there, Dusty. Where are moving averages best observed for supporting resistance? Right, that is actually a great question. Because some of the easiest systems in the world are moving averages. And they do have their place. But a lot of people don't actually know where moving averages come from. So they just put them willy-nilly onto a chart. So they'll go, wow, 200 moving average on a 5-minute chart. But what does it actually mean in the markets? It doesn't mean a lot, to be honest. It just means it's 200 5-minute candles back. But for the big players, that's couldn't care less, you know. So you have to understand where they come from. And the main moving averages that are observed for support and resistance are on the higher time frames, like the daily, and the daily is the one. If you ever listen to the news or look at any analyst that's talking, they'll talk about the 20-day moving average, the 100-day moving average. So it's the daily that they're looking at. They're not looking at low time frames. So if there's going to be a bounce point, the big money is looking at the daily. And the way they are built up is if you stripped out all of the holidays and weekends, etc., there's roughly 200 working days in a year, 200-day moving average. The 100-day moving average is obviously the 6 months. 50-day moving average is the year quarter. Then you move it down into the 20-day moving average, which is roughly 20 days in a working month. Then it goes down to the 5-day moving average, which is a working week, Monday through Friday. And then the wild card is the 8, which is based on 8 working hours within a working day. Simple. And that's how it works and where it came from. So the daily is where I would be focusing my attention. Plot them on your chart so you can draw little marks, and then you know that's where the moving average is on the daily, because it's not going to move that much within the hour. And then when you're down on your hourly chart, you can see where these points are, and then you've got your decent pockets of air between them. Okay. And then we've got finally Ian Dodds. A little salute to you, my friend. And what is the secret to your consistency? Right, okay. Well, that's a big topic as well. But it's actually got a very simple answer. Less is more. I don't trade that much, Ian. I'll trade once, twice a day. I have carve points that I manage, but I'm only really looking for 1 or 2 trades a day, but quality trades. And it's not uncommon for me to look at a market at 7 in the morning and not trade it till mid-afternoon, and I'll wait for that market to line up. And that's what breeds consistency. Less is more. Because when I'm going into market, I've pretty much already got it nailed down, because I've done my homework on it. And because I'm waiting, I can study it, I can understand it. And I know where my good entry point is. The market will always fluctuate. And if you're on something like the DAX, that fluctuation can be 80 pips in a heartbeat. But if I already know what the dominant direction is for what I'm looking for, it becomes a lot easier. And it's why I don't mind the heat. And again, it goes back to some of the questions earlier on about scruffy madness. Well, if I know I'm going to take some heat on, I might as well profit from that as well and scale into that movement. And then when it moves for me, it pays me a better wage, and it's all part and parcel of the homework that I've done. And that's it. And the other side of it is I don't chase markets. I'll filter down into a handful. I'll filter that handful down into one trade, and then I'll filter that one trade into time scales where I can see the entry and the exit, and then I wait. That's the secret of consistency. And with everything, it's just discipline. You know, I don't jump in willy-nilly. I'm not greedy, so if I can see that I've been paid enough, I don't care if it's gone 500 quid against me and then I'm 200 quid in profit, because I only need 200 quid for the day, so I can take my 200 quid, stop, and that's it. Because there's nothing worse than hanging on to a trade and watching it go, oh, well, I'm up to 300 quid, fantastic, and then it rattles all the way back on yourself. Why? If you only need 200, you've already got a £100 bonus in that situation. Take the money and then stop. Do it again tomorrow. And that's the secret of trading, knowing when to stop. So that's it. I hope that helps. Do keep asking your questions. I'll compile them, and I'll maybe do this once a month if that's what you want. But if you do contact me, I answer every single person that comes in, and I'm easy found. You'll find all my contact details in the description below. I did set up a free Telegram for you guys to use. If you use it, great. If you don't, no worries. Reason, I'm sick of being in forums, and as soon as you put a post on, there'll be 101 different groups jump at you, selling you God knows what. Didn't like that. Nobody actually talks about trading or themselves. So it's there for you if you need it. But other than that, it's been great speaking to you. I'm now going to go off down and enjoy my coffee on the veranda, watch the world go by, jump in the pool, and live the life. And that's what trading has given me. And if you want to see more, do subscribe to the channel. I upload pretty much every day with my trades, and on a weekend it's more a casual learning and just my thoughts on the markets. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.